Silver, the poor man's gold, has so far failed to show any spark of life this year, opening 2018 at $17.20, then briefly rallying to a February peak of $17.60 before turning lower and remaining negative for the year, underperforming gold, which has managed to remain positive for the year, as both precious metals have effectively flatlined since their February highs, with silver remaining stuck within a tight trading range of $16.90 to $16.10, which is a far cry from the bullish expectations of many silver bugs at the start of the year. In terms of a silver market position, then as is currently the case, the silver market usually can be expected to be a dead market with a tendency to flatline, not just for a few months, but for even years, as it tends to play second fiddle to gold in terms of tradable swings, usually only coming alive towards the latter stages of precious metal bull markets. And so, as per my analysis and price forecast of December 2016, my favourite exposure to silver was via taking a long-term view, i.e. to accumulate silver at a low price, usually at the bottom of its trading range, which at the time was to buy at sub $16 for an eventual spike to at least $35, which at the time I expected to occur over a 3 to 5 year time horizon to deliver a return of about 120% and possibly as high as 200% when the silver price spike eventually materializes. So firstly, how has silver performed since my December 2016 analysis? Well, the chart shows that silver, after the initial rally towards $19, has remained firmly stuck in a trading range of between $18 and $16, which this year narrowed to $17 to $16. The silver versus gold price chart clearly shows that after tracking the gold price quite closely during 2016, that as soon as investors became comfortable with that trend, silver abruptly stopped tracking gold since the start of 2017, since when it has greatly underperformed the gold price, which is currently trading near its 2-year high while silver is trading near its 2-year low. Whilst the silver gold ratio chart further illustrates that silver is effectively trading at a relative price of about $15 when compared against the current gold price, which implies that speculative interest is mostly focused on gold, leaving silver underbought, which is good in terms of accumulating a long-term position, even if silver could continue to remain relatively underbought for some time. Whilst my forecast expectations for the gold price are for a trend towards $1,500 this year, which would translate into a silver price of $19.35 at the current ratio, or around $21 towards the middle of the gold-silver ratio. So what about silver versus the US dollar? As one would expect, an inverse relationship, i.e. a strong dollar is bearish for silver whilst a weak dollar should be bullish. Again, the inverse correlation appears to have broken down during 2017, as unlike for gold, silver failed to benefit from the fall in the US dollar. Clearly silver is currently out of favour with speculators, as they have been focused on more liquid markets such as gold and crude oil. Nevertheless, this again points to silver being underbought. Trend analysis. Last year's and this year's trading ranges mask a larger pattern, that of a converging triangle, which is a continuation pattern for the preceding trend, which was the 2016 bull market run from $13.50 to $21. Therefore, trend analysis implies that the silver price has been correcting the preceding bullish trend in preparations for a breakout higher, that I expect to slice through all of the resistance levels until it hits its previous high of $21, which it will likely break to target the next higher resistance area of $25. So the silver trend chart is looking very bullish pending a breakout. The MACD indicator is also showing signs of convergence, implying that the silver price should break out over the coming summer months. In terms of the seasonal trend, then we have already had the strongest period of the year, i.e. January and February, after which July to September tends to favour a bullish probability, which would appear to fit in perfectly with the unfolding picture for a July silver price breakout higher. And what about the other commodities such as crude oil? Well, as I covered in my crude oil analysis that concluded in a bullish trend for 2018 towards a target of $80 this year that I'm expecting to be reached during late August, and so again supportive of a silver price breakout during midsummer. And finally, Elliott waves. Well, the best pattern that fits the silver chart, considering that the July 2016 peak was a fifth wave of sorts, is for a rather messy ABCDE correction, which implies that we have already begun silver's next bullish 5 or 7 wave advance. That confirms my preceding analysis and implies that silver is about to embark on a bull market that will see it achieve at least $35. Though I do take Elliott waves with a pinch of salt, so it's a secondary analysis tool. And so in conclusion, original positions accumulated at sub $16 remain in profit as we await the silver spike to $35 plus, whilst 2018 has continued to provide ample opportunities to accumulate silver at a sub $16.50 price. In terms of the prospects for silver for the remainder of this year, well, this analysis clearly implies that silver is gearing up for a significant move higher, a breakout above the series of resistance levels all the way towards the previous high of $21, where it may pause before resuming its bull run towards my long-standing target for a silver spike to at least $35, as I outlined expectations of some 18 months ago. Also, given a move above $21, it is likely that I'm expecting silver to outperform gold and thus generate much speculative interest. And ensure you are subscribed to this YouTube channel for my forthcoming analysis and detailed trend forecasts.